Abdul. Welcome to David Anderson Talking Market Data. We've had a few technical hiccups getting to this point. The joys of doing podcasting. I'm learning as I go on, and thank you for bearing with this and sticking with this and being here. In a few seconds, I'm going to ask you, as I do all my guests, to introduce yourself and your company, or companies in your case, I think. And I'm going to put a link to your LinkedIn profile and company profiles below. But for the first time ever on David Anderson Talking Market Data, we're now going into the sponsorship slot, the advert slot, our first ever sponsor, which is actually me. I am the first sponsor of David Anderson Talking Market Data. The reason I'm doing this, I'm just giving this as an example of how if somebody does want to sponsor, which I sincerely hope you, the listeners out there are people who would like to sponsor David Anderson Talking Market Data, this is where I would insert the advert. There'll be a whole variety of other logos and branding, etc., that will be made available. I have detailed statistics on YouTube viewership, on downloads from things like Spotify and Apple, and downloads overall, etc., etc. So I can provide a lot of information. But I am, frankly, seeking sponsorship, advertising on David Anderson Talking Market Data. If any of you out there are interested, please get in touch with me. And that's the end of the commercial break. We're now back into the normal programming. So, Sara, this is your chance. Tell us a bit about you, the person, and then the companies that you're now working with. And obviously, I knew you for a long time at Borsa Kuwait. That's where I got to know you. But you're out doing your own thing now.
Yes.
Tell us about it.
Sure. Thank you, David, for having me. I began my finance career in 2002 as an investment strategy manager, so heading the research department at an investment firm in Kuwait. My role focused on in-depth research and analysis of international markets, covering the major indices, as well as equities, forex, and commodities. So I conducted both technical and fundamental analysis to develop market forecasts and investment strategies. During this time, I also wrote a full page in a Kuwaiti economic newspaper, providing insights to global markets, economic indicators, their impact on the market, and investment outlooks across asset classes. And then I joined the Kuwait Stock Exchange. Back then, it was Kuwait Stock Exchange in 2005, and this is where we met, David. I spent 17 years at the exchange, and across those years, the exchange underwent a significant evolution, demutualizing and rebranding as Borsa Kuwait in 2016, and later on becoming a publicly listed company in 2020. So I was director of data services at Borsa Kuwait. I established the market data department from the ground up. Today,
we're going to talk a lot more about that.
Exactly. We'll talk more about it later. So today I'm still in the market data industry as managing partner for the MENA region at IPCL, which is a UK-based consultancy specializing in market data. So we advise stock exchanges, asset managers, data vendors, banks, fintechs, hedge funds, and index providers on data licensing, on rights management, audit defense, and monetization strategies. In parallel, I'm the founder and CEO of RTS, which stands for Reinvent, Transform, Sustain. It's a company focused on digital transformation, AI, and sustainability. So we provide advisory services, technology solutions, and training to help organizations future-proof their operations. If you want a bit about my education background, I hold an executive MBA from the American University of Beirut. I'm a CFA charter holder, and I earned multiple certifications in the capital markets and data, including data science certificate from Harvard University, and both FISD credentials, the Financial Information Associate and Data Licensing Specialist. So that's
wow. Crikey, that a lady of letters. You must have an awful lot of letters after your name. I'm impressed. I'm genuinely impressed. Look, it's a pleasure. As you say, We have known each other for a long time, and I've enjoyed our friendship and professional relationship over these years. So I'm going to pounce. In fact, I mean, let's explain to the audience what we're going to talk about. We're going to have a good chunk of time picking your brains about your expertise and experience on exchange data. So that's going to be a key element. We're going to have a section where we talk about AI. I mean, everybody's talking about AI. A brief section where we talk about AI. Excuse me. But another thing that I really want to pick your brains on is the region. I mean, it's interesting when you talked about your company that it was focused on the MENA region, Middle East, North Africa. We're going to talk about this, the different ways of looking at the region and about it. But let's start with exchanges. And if I can sort of prime the conversation a little bit and ask you to comment on this, the complaint, if that's the right word, from the customer side, maybe even from some of the data vendors who are data acquisition people, is they're wrestling with this perceived nightmare of incredibly complicated exchange policies that themselves are changing and evolving over time. I mean, a policy from one exchange is constantly being updated and changed and tweaked. I think cynically, the customers would say tweak to try and squeeze more money out of them. But hey, that's the nature of business. So it's the sheer complexity and constant changing of a single exchange's policy. And then the fact there are sort of 300 exchanges out there, and they're all doing that. It's an ongoing problem if you're on the consuming side of that. And I'm guessing even if you're on the production side of that, understanding all this complexity, where I don't know where all this, well, I do know. Where did all this complexity come from? I'll pose this as a question. I think it came from the fact that exchanges, you mentioned the word that Boursa Kuwait was demutualized. So then it became for profit. It had a profit motive. And therefore, people in exchanges, companies in exchanges, when you were working at Boursa Kuwait, your lords and masters, I'm sure were asking you, Sarah, make us more money, grow the revenues. Grow the revenues would have been their demand off you. And I'm sure that is what's going on in so many exchanges. I mean, is that the main driver, this profit driver? Or is it a more nuanced reasoning? Why do exchanges come out with these products? We're going to talk about the specifics, but how did we come to be in this situation?
Let's see, David, today's capital markets data is not just a byproduct. Data is the lifeblood of financial markets. It's the foundation of value creation, right? The innovation, the informed decision making. And technology has dramatically improved access to data. So it has evolved, it has changed, So both the usage of data and the delivery models have evolved, and they continue to evolve at a fast pace. Yeah. So this evolution is transforming the way institutions interact with data, and it's reshaping commercial and regulatory landscapes as a consequence, So data usage has evolved from simple display on screens, what we call the display usage, to what we call non-display usage, which includes the algo trading, the risk management, order execution, and other usages. And then the data delivery has as well evolved, the cloud, the API, the fintech platforms. So consequently, commercial models had to evolve, shifting to usage-based fee structure and licensing that adapt to those changes. And then AI came into play. And as we all know, it's reshaping the ecosystem by enabling predictive analytics and new product development and other usages. So the regulations,
keep going.
Not just
you're on a roll.
Regulations as a result are changing, because just to adapt to all this.
I totally agree with you. I mean, it's the non-display, it's the delivery of a sort of data feed type solution rather than the old-fashioned terminal. I mean, I started 41 years ago, green screens with Telerate and what have you. That was ancient history by the time you joined and came along in the early 2000s. And I think my sense of it is exchanges, not just exchanges, all data providers have struggled to work out how to reflect value, how to understand the value that customers are getting from their data, and to find some pricing mechanism to reflect that. I mean, there's an interesting debate going on in Europe, to do with the European Consolidated Tape and what ESMA are doing, the European Union are doing, where they've got this reasonable commercial basis argument, where they are saying, it is being said, that data should be charged on the basis of the cost of production, which in itself is difficult to measure or define the cost of production, and then some sort of reasonable markup profit margin. That seems to be a suggestion that the European regulators are talking about. I'll chip in my own personal belief, which is it doesn't make sense, because data, market data, is a digital product. You talk about digital transformation. I would make it analogous to music or TV shows or movies and that sort of thing, where there's a cost of producing it, but then it can be multiplied hundreds, thousands, millions of times. So I think digital products are priced based on the value that the consumer accrues from them. It's a difficult job of the producer who's setting the price to work out what that value is. I'm rambling a bit. Help me out here.
I couldn't agree more. So as I mentioned, data is about the value you create, right? It's about what innovation you can do with data. It's not only about the cost, it's about the value you create, and talking about the complexities of the exchange data licensing, because, data is not only about the access, it's about who uses what data, how data is being used, when, and for what purpose, And yes, the market data now is a profit center for the exchanges. It's all tightly controlled. It's monetized by exchanges. However, for vendors, it's a double whammy actually for them, because they have to deal with the terms and conditions of the exchanges and data provider, and then they have their own terms and conditions that they need to.
So it's a compound, a multiplier, whatever it is. You got two.
Exactly. Yeah. So back to the complexities. So it's not only about the usage. You have then different types of data. You have the level 1, level 2, full order book, and then you have the different timeliness, real time, delayed, end of day, and use-based licensing. So you have to deal with all these, and then exchanges need to protect their rights, and using the data and distributing the data. You have different usages, like the internal use, the redistribution. So all of these needs to be governed under, reasonable.
And I think the newest iteration is this use case scenarios. Okay, if you're using the data in foreign exchange trading, if you're using the data in risk management, if you're using the data in defined use cases, there will be different charges. So if it used to be, my sense was way back when non-display first came out, there was a rather blunt instrument. You got a non-display charge, which was a sort of single lump sum charge to a consuming firm, a bank or a buy-side institutions. You paid that lump sum and you could do whatever you want, non-display. But over the years, and I think it's driven by that profit motive. It's hang on, there are multiple uses of this data, and we maybe need to charge it. If somebody is using the data just for one thing, fine. But if another firm is using it in 20 different ways, maybe they should pay 20 different charges. Are you seeing that? That approach?
Yeah, exactly. It's use-based. Why are you using the data? For what purposes? And the whole licensing and the fee structure, it's all around the usage of data.
And I would opine, I would observe that there are two different debates. There might be multiple debates, but two that I'd like you to sort of comment on. One, which is the exchanges are charging us too much money. there's a sort of argument, there's a viewpoint that somehow we, the customers, are being ripped off. We're being taken advantage of. The exchanges are just taking advantage of their market position, whatever it is, to charge us more and more money, higher and higher amounts. The amounts that exchanges are charging is going up way faster than inflation. I think there was a report, in Europe recently arguing that there is no market for market data. There's this opinion from some quarters. By the way, I'm not making a judgment about the rights and wrongs, that somehow exchanges charge too much money. So that's one, and hold that thought, because I'd love your opinions on that. I think I know your opinions on that, but let's share them with the world. And then the other one, which is related to this complexity, which is, if we ignore that first argument and just say we as a customer agree, and they do agree, they want to comply, but actually having the systems and software and capabilities to be able to comply with some of these complex rules is, I've heard from customers saying, look, it's not that we necessarily disagree with that policy, but we don't know how to physically comply with it because our systems don't measure and count and control in the way that policy asks us to do. I'll repeat the question when we go back to the first one. Exchanges are charging far too much money, and it's morally repugnant how they're doing that. You must have heard that. You must have sort of seen that sentiment from some customer firms.
Yeah, David, but as we said, data has a great value. It's the lifeblood of financial markets. You cannot make an informed investment decision making without the data. It's crucial in the investment and the financial industry. So it has a great value, and I think now there is increased awareness about the value of data and the different ways that you can use the data. So if the exchange, if they own this data and they are aware of this value creation and that can provide to others, so it really has value. Now, yeah.
Yeah, I thought you would say it, and that is, I think that's the counterpoint from the exchanges, that look, there is real value to this, and they are profit-centric organizations. To be blunt, it's a lot of the customers used to own the exchanges, and then decided they'd take their profit, demutualize them, and make them for profit, and that has now sort of come around, and those exchanges are profit-seeking entities. So the other question was that more the mechanics of compliance, that whole area of trying to be compliant. And again, I'm thinking about it. It's things like, I used to work for Reuters, and there was DAX, the Data Access Control System. I think there's the MRS from a Bloomberg world. There are various tools and systems for controlling access to data. But I think that in itself has got harder to do when the data is in a non-display context. In other words, being able to track which applications are using it, have access to it. I mean, I just used two phrases which are not the same. One policy is about having the right to access something. You pay in advance, on your contract says you will have the right to access this. It takes no account of whether you choose to look at it or whether you choose to use it. You have paid in advance for the next 3 months, next 6 months, whatever it is, to have access to that. Whether you choose to access it is your choice. You've still got to pay us. And then the other side of that equation is usage. And help me out here. My sense is there's a big focus on usage reporting, being able to track what applications or people actually used. But I believe that's mainly done in order to then renegotiate the rights access contracts for the future. If somebody hasn't been using something for 6 months, then let's not re-sign up for access rights for the next 6 months, as opposed to exchanges charging like electricity is charged for, where you have a meter and you pay for the units of electricity that you actually use. I don't believe much real-time market data, exchange data is charged for on a usage basis. I may be wrong. I don't know. What have you seen out there? Do you follow the distinction I'm making there? I'm just curious what you see out there.
Yeah, actually, it depends on the consumers of data. So when they come, they request the data from the data vendors or from the exchange. They have their strategy. They know what are their usages, and they subscribe to these usages. So if I know I'm gonna use data for risk management or for algo trading or whatever, so this falls under non-display usage, and you subscribe under this. So you come and you know what are the usages of data that you want to subscribe to, or for what purposes you want to use the data, right? So now data often flows from exchanges to data vendors and to end users. And licensing must govern every link in the chain, So this adds layers of complexity, just to answer your second question, David. And then you have the audits and reporting, of course, in order to keep track of the whole usage of data and how it's used in applications or other usages.
I mean, have you found that auditing has got more complex? I mean, I'm trying to get a couple of auditors to come on the podcast because I'm curious. Auditing's a very emotive, sensitive topic because it does speak to the fact that trust has broken down. In the good old days, people would just do honesty statements and trust, and auditing by definition means I'm not going to trust what you say. I'm going to come and actually look at it. It's a bit of a cynical view, but again, what are you seeing in the auditing world of late? I mean, it must be difficult for an exchange and its auditors to actually go into certain firms and find the actual information they're seeking. Again, not an area I'm particularly familiar with, auditing.
No, actually, we do audits with the IPCL. Right. But yeah, as you said, so those agreements are based on trust, the vendor or the client, they come and tell you, I will take the data and I will use it for 1, 2, 3, right? And then it's based on trust because you're not controlling their systems, you're not seeing their systems, how data is being used. So exchanges have this audit rights, to do it. And you'll be surprised, David, that the audit would generate a huge amount of money of underreporting, not necessarily always with bad intentions, but you will find a lot of underreporting.
And I mean, that's an interesting point. My sense is that in the main, not 100%, but in the main, the consuming firms, the banks, the buy side, wish to comply. That if an underreporting occurs, I would sense that in the vast majority of cases, that's a mistake, that's an error, rather than some deliberate. I mean, yeah, let's be blunt. If one's talking about deliberate, then it's theft. I mean, there's no other word of describing it. If it is deliberate sort of underreporting, then it's theft, fraud, whatever you want to call it. But I don't sense from talking to people out there that that's the case, because there's enormous reputational damage. If you're a bank or a financial institution, if you're bluntly accused of being fraudulent, dishonest, thieving, that's a pretty harsh judgment. But I mean, why, in your experience, when you've looked at it, is there any rhyme or reason? Is there any pattern to what types of mistake are made on this underreporting? I mean, is there any pattern to that? I mean, without giving obviously specific, we're not talking about individual firms or individual exchanges, but I mean, what are some examples of a mistake? I mean, the reason why I think it's useful to talk about this is because, well, what advice, what mistakes have you seen that other people should avoid making?
Yeah, exactly. So everyone wants to be compliant for sure, because there is a huge reputation risk for being non-compliant, and they want to be compliant. But usually those underreporting and those that we find when we do audits, mainly it's because of misunderstanding of the policies, and Yeah, so that's why when we advise exchanges or other stakeholders, we always advise to have the licenses as simple as possible, the policies as simple as possible, to communicate with the client, with the vendor, to have the dialogue, so to make sure they understand the policies, they understand how to apply, the requirements and policies and the agreement. So mainly it's just a misunderstanding of policies.
And I think that's really interesting, because it does go to this complexity, because it's complexity, but it's a lot of the policies are difficult to understand. And I remember years ago I did a bit of analysis on exchange pricing policies and what have you. I won't mention the exchange. It was a big one. And I think I went to the sort of product manager, one person, asked about a particular policy to clarify what it meant. I went to somebody in the audit department there to clarify what it meant. I went to somebody else in finance. 3 different points of contact in the same exchange. And I got 3 different answers. I mean, the blunt truth is, they internally different people in their own organization interpreted a particular phrase differently. So that was one observation. And another observation is, I've heard exchanges say to me, when I've said exactly as you just said, exchanges, make your policies simple, clear, unambiguous. That would be good advice, I think. However, exchanges have said to me, some exchanges, oh, David, if we were too precise, if our language was so clear, so unambiguous, some clever person at some clever bank or whatever would sit down, analyze that, and work out how to game us, work out how some way of getting around that, the language, and avoid the spirit of the agreement and just apply the letter of the law and say, if you actually, legalistically read that, it means we can do, we've worked out that we can do this, this, and this. I know you didn't really want us to do that, but if you read that clause and you actually analyze it legally, we are entitled to do that. And then what the exchanges have said to me is, by putting a little bit of ambiguity in there, it means when that situation occurs, it's, well, we don't, actually, no, we've interpreted it differently, and we're going to apply our interpretation.
Flexibility. So it's about flexibility.
Yeah, and I can understand from both points of view. I mean, it goes back to a point I made a second ago, which is a little bit troubling, that I do genuinely think that trust has broken down between the two parties. The exchanges, on the one hand, think that they don't think all the customers are thieving, fraudulent entities or whatever, but they have a great sense of distrust about what the clients are doing with their data, and are the clients trying to get away with certain things. There's that sort of attitude. And in the same sense, the customers feel that the exchanges are just somehow abusing their powerful market position. So there's this, it's become a very emotive discussion. I try to get in the middle of it. I try to say to people, it's not, on the one hand, if you're somebody selling something, you want to sell it for the most money you possibly can over the long term. And if you're a customer firm, you want to pay the least. But you also want to have good service, because there's always a downside. If you pay too little, you might end up with bad service. I'm mixing concepts up here.
Yeah, so let's not just say it's trust, maybe more just to make sure that all the policies are properly, implemented. So it's about simplifying the agreements, reducing complexities, creating more transparent frameworks that serve both exchanges and vendors and consumers as well. And what makes it more complex, David, for all stakeholders in the industry is they say lack of standardization or the common language. When you have a common language for the definitions, for the terms, it makes it easier. But also for exchanges, it's not really easy to standardize the agreements, like talking about the exchanges here in this part of the world. There is regulatory fragmentation. So different countries
Yes.
have different rules and regulations. They have different definitions, and exchanges want to protect their rights and cover the different use cases, But I think, yes, it's good to have at least a common language. It makes it easier for exchanges, vendors, and consumers, to deal with it.
And I'm picking up a vibe from a number of conversations I'm having either on these podcasts, but also separately, that maybe this common language idea can work. As soon as you mention the word standardization, I think everybody sort of agrees that that would have been a good thing, but they're very nervous of it because the way I've heard exchanges approach that is they said, but standardization sounds great, David. It's good for the customers, maybe, but it puts us in a straitjacket. It puts us under constraints. If we've agreed to a certain standard and then some clever person in our organization dreams up a new product or a new idea, which is a good idea for everybody, but it falls outside of the standardization we've agreed to, we might not be, we've signed up to not do that in a way. So it reduces our flexibility. I think that's definitely something I've heard. Let me pick up quickly. Maybe we might go all over the place a bit. We had our topics, exchanges, AI, the region, but I want to pick up a bit about the region from an exchange perspective. Maybe I'll hit you with the big questions about the region, but then let's dive into the exchange perspective. I struggle. I would refer to the Middle East. I don't know if there's an official designation of what's included in the Middle East. Then another phrase I've heard is the Gulf. Another phrase I've heard is MENA, Middle East and North Africa. Is North Africa not being the Gulf? Is there a clear definition of a region, or is it? Do different people look at it differently? I'm muddling myself up even asking the question. Educate us on the region, Sarah, at a high level, and then let's drill down to exchanges.
Well, the GCC, which is the Gulf Cooperation Council, is part of the Middle East. Okay.
So what is not in the GCC that would be in the Middle East?
Yeah,
is
exactly.
That Iran?
So the 6 countries in the GCC, the Gulf Cooperation Councils, are Saudi Arabia, UAE, Qatar, Kuwait, Oman, and Bahrain. All right. Okay. And then you have the Middle East. So this GCC is part of the Middle East.
Yeah.
So the Middle East includes Lebanon, Syria, Jordan, Iraq, Turkey,
Iran.
and Iran. Yes.
Oh, so Turkey would be in the Middle East. Well, because Turkey is a tiny bit in Europe, isn't it?
Partly in Europe, but
I'm showing my age now. They used to talk about Asia Minor. Did you ever hear that phrase? That's a very old-fashioned phrase, Asia Minor, which was places like Turkey and the Middle East. But then you've got North Africa.
Yeah,
which
you have Egypt, Morocco, Tunisia, Algeria, Libya, the North African countries.
And obviously we're not talking about this now, but then you've got Africa, Sub-Saharan Africa. There's Africa is another sort of whole region which we're not talking about. But from the capital markets and exchanges that are intrinsically linked with the capital markets. For example, I remember when I first started talking with you, there was the Arab Federation of Exchanges, but they changed their name to the Arab Federation of Capital Markets. That's another phrase, Arab. Most of the countries you've talked about are Arab by ethnicity. I suppose Arab is an ethnicity, isn't it? Although Iran, which is Persian, is not ethnically Arab. God, I'm getting awfully muddled up in everything. But the Arab Federation of Capital Markets, is that everything Middle East? Is Iran a member of the Arab Federation of Capital Markets?
I don't think so.
Would they be allowed to, or is it? Yeah, I don't know.
Yeah, but mainly their members are mainly the Middle East, the countries that we mentioned, and North Africa. And now they changed the name, and I believe just to have more members. So not only the exchanges, but it would be like clearing houses and other stakeholders in the capital market.
Got it. Yeah.
Covers-
Because you've got another region on the edge, people like Azerbaijan and Kazakhstan, they're sort of close. I mean, again, a thought I'd throw at you, and I'm interested in your view on it. The global capital markets arguably are dominated by London and New York. London and New York are the two big centres. You've got other big-ish centres, Hong Kong, Singapore, etc. Tokyo are pretty big centres. I hope it's not insulting in any way to say that a lot of the entities in, the Gulf region, the Middle East, are smaller by nature, and their economies are smaller, etc. And therefore, the stock exchanges. In fact, Sally Ann Taylor on the second podcast made an interesting observation that often countries identify themselves with sort of three things: their flag, their army or something, and their stock exchange. These are sort of symbols of patriotic pride. I mean, is there something there, that each country in the region, its exchange is an important part of its national identity? I'm thinking, because if you go back to Europe now, you've got things like Euronext, where you've got, Amsterdam, Paris, Lisbon, all merging. But I don't think that's happened in your region, has it? I mean, each exchange is reasonably distinct and reasonably national. Is that a correct viewpoint?
Yes, it is the national exchange, and each country in the GCC, there is only one national exchange, except for UAE, where you have the ADX, Abu Dhabi Exchange, and then you have the DFM and Nasdaq Dubai. But yes, it is a national identity, But like in the region, Saudi Arabia being the biggest, Tadawul.
Yeah.
With the market cap of around $2.6 trillion. So it's by far the largest.
And both they and the country Saudi Arabia are making a lot of noise. I mean, they're putting a lot. They're trying to be much more outward. They're trying to promote themselves as they should. But I've sensed there's a lot of activity going on in Saudi in the last couple of years. Is that the thing? A lot of investment, a lot of money is being ploughed into promoting the country, and I suppose in parallel promoting the exchange. Have I understood that correctly? Have I observed that correctly? How would you characterize it?
Well, yes, the Gulf region now is a rapidly evolving region. So it's undergoing rapid economic transformation, creating substantial opportunities for different sectors, including market data providers, the fintechs, the financial technology players. So now each GCC country has outlined ambitious national vision. So we have in Saudi Arabia Vision 2030, Kuwait Vision 2035, Abu Dhabi, Qatar, Bahrain, Vision 2030, Oman, Vision 2040. And the unifying theme across these visions, the drive to diversify economies away from oil dependency.
Yeah.
And towards sustainable, innovation-led growth. So the key strategies now in the region include expanding the non-oil sectors, investing in infrastructure, renewable energy, and opening up the capital markets to foreign investors. So there are great opportunities, investment opportunities in this part of the world.
So previously, help me out on the history here. Were foreign investors not allowed to buy shares on the Saudi market, the Kuwait market? Was that the history, that it used to be a market only for residents, only for people in those countries?
And
has
now
that changed? Talk me through, in all of those countries, is that pretty much the case?
Yeah, it has changed now. They're opening up to foreign investors.
And therefore, I presume that means that the data is more interesting to people in London and New York and Tokyo and what have you. Whereas probably when you started out, could foreign investors, for example, invest in Kuwait, on the Kuwait stock market?
Yes.
So they could,
Mm-hmm.
but in some of the other markets in the region, they couldn't.
Like they can now in Saudi, they can in the different markets here.
Let me tell you why what the question. What I'm saying is because of these changes, because of the opening up of the capital markets in the region, I would posit that means that the data from the region is more attractive, is more valuable to what we were talking about earlier on, and
Yeah,
that people sitting in London and New York and Tokyo and other centres would and should be interested in it and should be buying it, because whereas previously maybe that was less so, and maybe previously there was a much higher proportion of the data being bought locally because it was the local entities that were doing the majority of the trading in the local markets. But now that it's opened up, that means the data is more attractive. Yeah.
and also, David, also the IPO momentum is also a key driver of data demand. So now the GCC is entering a high growth phase for capital markets, especially in IPO activity. Like the GCC, the IPO forecast, I think for this year was around 40 offerings. So they already announced 30 listings. And Saudi Arabia is leading the pack. There are 27 IPOs expected in 2025. For Saudi Arabia.
And again, I'm not asking you for statistics here, Sarah. I'm just a high level sort of sense of this. There are two dynamics going on here, I would say. There is one about the interest in people from outside. I mentioned London, New York, Tokyo, whatever, who want to do business in the region, and their interest in, because you have got a capital market, you have got banks, buy-side institutions, national funds, sovereign funds, etc. You've got an investment community in the region. You've got a trading community in the region. You've got a broking community in the region, etc., etc., etc. And therefore, I'm presuming that that's growing as well. And therefore, those entities' appetite for data, not just data about the Gulf, but data about the New York Stock Exchange, London Stock Exchange, Tokyo Stock Exchange, the markets around the world, that regional investment banking sector must be hungry for that data. Therefore, I'm presuming, I'm talking to all the data providers all over the world. Come and sell your data in this region is one dynamic. And I'd love for you to talk about that. And then the other dynamic is, because the region is bubbling up and getting more and more active, and the exchanges are getting more and more active, then all those entities all around the world should be buying lots of data and services from the region. So it's a sort of selling into the region and then the region selling out. I mean, again, what's your sense of both of those dynamics? Are they both growing?
Yeah, both are growing, exactly as you said, David. But I meant those listings and IPOs combined with the broader economic diversification efforts that being done in the region, it creates a growing appetite for enriched data, for real-time data, and the predictive market data. So, of course, this will increase the appetite for data. It's all related.
Yeah. So I think let's bring this little section to a close. I mean, it's an exciting region. I'll be upfront. I still work with FISD, and I'm talking to my FISD colleague Tristan Dehan, who looks after this region. He took it over from me, and I think we at FISD, we're talking. I have had many conversations to you, Sarah. I think there's an appetite, there's an interest in the region. So I look forward to things happening in that. I've visited the region a few times. I've only done, I think, Dubai and Abu Dhabi so far. So I need to go further afield. So watch this space on that front. But let's move away from that. We haven't got that much time, so we're gonna have a pretty brief conversation. But AI, again, I'm going to sort of leave this free format to you. I mean, what are you seeing, hearing? What are you working on from a market data perspective? If you're a market data person, what's your advice? What are your thoughts about what people need to be aware of? And we're both non-technical people, so I'm not talking about technical stuff. I mean, I'm talking about business stuff. I'll throw one example. I'm definitely very conscious that people are using or seeking to use AI to review contracts, summarize contracts, extract meaning from contracts to, these complex policies that we were talking about before, whether AI can be helpful in managing and dealing with those complicated contracts is one example I've heard people wishing to apply AI. What else? Or what about that one, and what else?
Yeah, let me start by saying, David, AI is no longer a futuristic buzzword. Everybody's talking about
Yeah.
AI. It is the present, and AI is here to stay. It's already reshaping the entire industries, and market data is no exception.
Yeah.
So the rise of AI does present a huge opportunity for innovation, for product development, and value creation in the market data industry. Now, why now? Why AI now? Why this AI development surge in recent years? Just to tell you the relationship with data, because data is the fuel of AI, and AI has been there since the 1940s, 1950s. It's not new, but the current wave is driven by two key drivers. First, over 90% of the world's data has been generated in just the past few years, 4 to 5 years. And second, as we all know, the launch of ChatGPT in November 2022, which, it democratized the access to advanced AI to everyone. So what needs to be done in the industry to embrace AI and take advantage of AI? First, we have the data, right? So we need to optimize the data infrastructure, okay? Because you need high quality input data for the AI models to produce high value output. Because AI thrives on clean, structured, and labeled data. Okay, and market data firms, they're sitting on massive data lakes, but much of it is underused. So it's very critical to invest in data cleansing and data normalization, structuring data, enabling seamless access via APIs.
And I wholeheartedly buy into that. In fact, one of my earlier guests, Tim Baker, I don't know if you know Tim Baker, he often coined to me the phrase, making data AI ready. And I think that clean data, structured data, I mean, it plays into the alternative data world, but can't you even use AI to turn unstructured data, unclean data, if I can put it, dirty data, I don't know what we want to call it, into clean data? I think it's a great idea of getting clean structured data and putting that into AI. But there's an awful lot of data that isn't clean, that is unstructured. And can AI help with that?
Well, you need to start with data first. So you need to have your data clean, structured, labeled, because it's the output. And then you use the AI models to get it's the input, and then you use the AI models to get the output. So you start by working on data.
Again, not mentioning names, not breaching any confidentiality, but any projects you've seen, any practical examples? I mean, I absolutely take your point. This is not future tense anymore. This is real here and now, and it's changing. Gosh, is it changing? I mean, what are we up to now? ChatGPT 4.0, then you've got Gemini, and you've got Claude. I mean, I don't use it as much as I should. I occasionally use it. I should use it more. But I mean, what practical projects have you seen that illustrate and demonstrate this? And anything you could share, or is it all desperately secret squirrels? We promised to all kill ourselves immediately after we've heard it.
No, there are some examples in the industry, like some leading data vendors or the data aggregators. They are already filtering and prioritizing information using AI. And this is mainly for high frequency trading, where you just need the relevant data, the most important data in order to take the decision. So they are using AI in this. And for exchanges, there is the deep reinforcement learning, DRL. So it combines the deep learning with reinforcement learning to allow models to learn the optimal behaviors in complex environments, which is like the exchanges. So it can be trained to make dynamic trading decisions, buy, sell, hold, or portfolio allocation. And it's just to maximize the long-term returns.
And I think something we need to be careful of is we've all got very excited, for good reason, about generative AI, which is, large language models and the whole ChatGPT scenario has been fabulous. But as you rightly say, there's been a lot of AI activity for 50 years or whatever, and the sort of machine learning genre, as you said, things like reinforcement learning. There's a whole load of different techniques used. I did teach myself all about this at one time, but I don't use it all the time, so therefore it's easily forgotten. But if you do, the Financial Information Technology exam, there's a lot about all these different AI techniques. I should watch my own videos and remind myself about this. But another good friend of mine, Brennan Carley, who was also on the podcast a while back, I think he pointed out that the big changes that have made this all possible is computing power, especially now we've got GPUs and what have you, has so much better than it was 50 years ago, 20 years ago, even 10 years ago. Then you've got the cloud with all the storage and what have you, and speed of links, communicate. All of these technological advances have suddenly made AI possible. I think AI was all along possible. It just, if you put it into a machine, it would take 3 weeks to come out with an answer. And now the thing that used to take 3 weeks or even 3 years now comes out in 3 seconds. And soon it'll be coming out in 3 milliseconds. So I think it's something we all need to really take note of and sit up and smell the coffee, as they say.
Yeah, exactly. And now we're witnessing, the big tech companies are entering into the financial data space. So we've seen many M&As, between big techs and exchanges. Google Cloud with the CME Group, Microsoft, Nasdaq, AWS, Amazon with the LSEG. So
no, I think it's Microsoft and LSEG, and it was Nasdaq and AWS. But you're right. I mean, in the FISD world, we never heard of those companies. Well, we heard of them, but they weren't anything to do with us. And suddenly, they've come in big time. So it's exciting times in our world, as long as we don't get somehow knocked over in the rush. I mean, it feels sometimes, it's a rush. There's so much going on and so much change happening. Trying to keep track of it all is hard. I mean, how do you do that? I mean, you're out there going to conferences. I see on your LinkedIn, you're speaking at conferences. You're obviously listening. It just keeps changing. It's
evolving. It's evolving at a very, very fast pace. The AI revolution is well underway. And for market data providers, it's a very critical time. So those who adapt their infrastructure, those who innovate, upskill their teams, will not only stay relevant, but they will lead the future of capital markets data.
Sara, I'm looking at the clock. We're near the end. Not the end, but the end of this podcast. So I promised when we were talking beforehand that I always give my guests, if there's a couple of burning things that you really wish you'd said that we covered in the conversation that we didn't, this is your chance. what have we missed? What would you really wish a market data audience out there was aware of that we haven't covered on this podcast?
Actually, we spoke about the challenges and complexities that are facing the market data industry in the region and worldwide. But it's equally important to focus on the practical solutions as well. So I think for this region, we need a dedicated market data forum, and you had this dialogue so many times, you and me, David, before, So we need a platform that brings everybody together, all stakeholders. We talked about, the audit, we talked about the complexities of licensing, but you need to have the dialogue between the vendors, the data providers, the aggregators, the consumers, and now the tech providers as well, which are key now in the industry. So this is very important. This forum would foster open dialogue, would promote collaboration, align on best practices, and it will eventually help in shaping the future of the market data ecosystem. And
I think I agree. Because you and I have talked about this. It's sometimes easier said than done. I think we're going to get there. Tristan will make it happen. But I think I wholeheartedly agree. In fact, I'd expand upon that. It's not only creating a forum for you guys in the region to talk amongst yourselves, but I think there's a massive opportunity from people outside the region to join in that conversation, maybe to help with that conversation, to share some of the experiences that have occurred outside. And also, and I probably displayed my ignorance here. I mean, let's be honest, I don't really understand, the Gulf region, the Middle East, whatever. It's a complicated region. And that is putting it mildly, but for lots of reasons. But it's something I think we outside of the region should take a keener interest in. We need to teach ourselves. We need to understand you guys more. And I get the sense that you guys are sort of opening your arms, saying, "Come on in, come and have a chat." It's the region is open for business, is what I'm hearing.
Yeah, exactly. Lots of opportunities, as I mentioned.
Brilliant.
And
don't have to do a last point. We've talked about a lot, but one last burning message to the audience.
AI again. I encourage everyone in the industry to embrace AI, because by leveraging AI, we can unlock tremendous value.
I agree. Although I'd say leveraging, none of this Americanism. You spent too long talking to Americans. But look, Sara, this has been brilliant. After our technical hiccups, which we won't bore the audience with, but were somewhat stressful for you and I, we made it. We got through this. So I want to say a massive, massive thank you to you. And I hope I'm going to see you at some point soon. It's been a while. But thank you. Do not hang up. I will stop the recording shortly, but I will bid you farewell.
Thank you so much, David. It's been a pleasure.